Okay, so it's been a couple of days since our last SoFi stock update, so we have to go over the charts, how we're looking right now, what analysts are thinking, of course, what I'm doing, and the numbers behind the company as the stock right now has come down big time, so we have to do an update on everything, guys. So hit the like button, make sure to subscribe. We're on the road to 100,000 subs here on YouTube, and get your 30 stocks for a moo. Use the link down below. Deposit at least $100, you get 5 stocks. Deposit at least $2,000, you get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY. So guys, use the link down below, or again, go to stocksurfest.com/moo. And with that being said, cheers, let's dive into it. So right now, SoFi is sitting at $11.30. It's up a little bit on the day, which is a freaking shocker considering how the markets have been, how SoFi stock has been. It's up around 1.2% now, up 14 cents on the day, and this is after yesterday's bloodbath. The stock went down, I think, from 12.50 on Friday, which it closed at 12.50, 12.55, and we got all the way down to $10.36 after the bell yesterday. So we were down about 18% from Friday's close to the low yesterday, Monday, after the bell, which is unbelievable. And now we're getting a bit of a snapback rally. We're up about $1 off yesterday's after market lows. So we're up around, let's see, percentage-wise, about 10% off that low, but we're still very much so in a downtrend, right? Nobody's denying that. Clearly on this 30-minute chart, we're downtrending, 20-day chart, you name it, we're down big time. And I think from the recent high, 18.45, now down to what, $11.30, we're down, it must be 35-40%. Yeah, 35 to 40%, right? Which is a pretty big drop in a short amount of time. And this is, bouncing back in the midst of a decent day for stocks. I mean, guys, believe it or not, QQQ is up 0.25% right now. It's about 11:35 a.m. East Coast time. QQQ is getting a rebound, which is nice, although it's still very much in a downtrend like we covered in my last video. The Russell is up about the same as QQQ, and the S&P is down. S&P is down about 0.5%, and the Dow's getting the biggest hit today, down another percent. The Dow's down currently about 400 points, as the VIX is pretty much flat at 27 to 28 points as of this video, after hitting almost 30 points earlier in the day. You guys see right here, we hit 29.50 on the VIX. Pretty nuts. So you guys know my position on SoFi, right? I bought a bunch in the $5, $6, $7 window, and I've held it now for over a year, right? Yeah, it's been over a year since I've initially bought SoFi, and I bought more recently on this dip. And you guys remember I sold the covered calls on some of my position that expire, I don't think this Friday, but the Friday after. I sold the $16 covered calls to collect some premium. As I saw, SoFi was pretty flat. It didn't look that bullish, right? It actually looked kind of bearish at the time. So I sold those calls, and that's kind of what you want to do with covered calls. If the stock is going bananas, it's going up like crazy, you don't really want to sell covered calls on it unless you don't care if your shares get called away, because if you sell covered calls on a stock that's ripping, right, you're going to miss out on upside if you set a strike price that's too low and then it rips past the strike price. You're not going to get on, or you're going to miss out on that gain past the strike price on the shares that you sold covered calls on. But when the stock is flat, downtrending, it looks like there could be more downside, that's a good time to sell covered calls. And you guys probably remember it was at the $14.50 range, I believe, where I did sell those calls when we were on the brink of falling through the support. And lo and behold, we fell through the support, and now we're down big time from that point. So that move, that move on my part was good. And now I'm actually eyeing up cash secured puts. We covered this, I believe, on my TikTok videos, my short. I upload all those shorts here on YouTube as well, but they don't get nearly as many views as they do on TikTok. I mean, guys, my TikTok's been actually exploding recently. All my videos get like 100K views, 50K views on TikTok. But yeah, they don't do as well here on Shorts on YouTube. But I still post them on all platforms. So I'm not sure if you guys saw it or not, but I covered on that video how I'm going to sell cash secured puts at the $10 strike, $9 strike, because that's where I'm looking to actually accumulate more shares. And if it doesn't get there, I'll keep the premium. Either way, I'll keep the premium. And that's kind of a nice strategy if you have some cash in your portfolio and you want to accumulate shares of a stock at a lower price, right? Sell cash secured puts as long as you have the cash as collateral. And then if it gets to that level, boom, you buy the stock, you keep the premium. And if it doesn't get to that level where you would have bought the stock anyway, you keep the premium. Does that make sense? That's kind of where my head's at right now on SoFi, coming from somebody that's still up a good amount on their position, even though we're down 40% from the recent high. So interesting times, to say the least, guys. Interesting times here for not just SoFi, but obviously the entire stock market. And as we've taken a beat down lately, well, SoFi's numbers have gotten more attractive in terms of their valuation. Their market cap has come down a lot. Let me actually show you this right here, guys. Market cap now is chilling at $12.3 billion. Obviously, this is a high beta stock. It's at 1.8, way more volatile than the overall stock market, which it obviously works in both directions, right? So when stocks are going bananas, the S&P is going wild, SoFi is going to outperform. Not every high beta stock outperforms. That's not necessarily how it works. But, in general, if a stock has super high beta, in this case 1.8, it's going to go wild to the upside sometimes, right? A lot of the time when markets are hot. And, well, again, it works the other way. When stocks get destroyed, high beta stocks, they get nailed, as we've seen with Palantir, as we've seen with SoFi, which is why you guys have to trade at your own risk. And now the PE ratio has come down to 28.8 on a trailing 12-month basis. You guys see right here, right? So that's interesting. I wonder what the forward PE is. Something tells me it's higher. Maybe I looked at it already and my subconscious remembers that. But let me pull it up here and see. It's higher. 34 forward PE. Interesting. The price of sales right now has come down a good amount. It's at 4.7 compared to where it was a couple months ago at 6.52. So valuation-wise, SoFi has come down to a more attractive level. Price of sales has come down. PE has come down. I mean, look, trailing 12-month PE, guys, as of December was 128. Now it's a 28. So, yeah, it's come down a lot, way, way more attractive at these levels. And let me pop up the analysis tab. Give me a second here to see what analysts are saying. Price targets on Wall Street, the estimates, the whole 9 yards. So here you guys can see, as of now, March, we don't have many sell ratings as we did in February. In February, we had 3 sells and 3 underperforms. Now we have 3 underperforms and 1 sell. So now that the stock has come down a lot, not many sell ratings on Wall Street. In fact, a lot of them are holds. In this case, 9 out of the 19 analysts here on Yahoo Finance have them as a hold, 4 as a buy, 1 as a strong buy. So overall, we're tilting more to the, hold/bullish side on SoFi in terms of these analysts. And the price targets, we have the high being $20, the lows $5. Currently, we're at $11.35, and the average is $13.73. So we're more on the lower end of the analyst price targets on Wall Street, which obviously we don't just blindly buy based on that, but it is still interesting to look at here. And for the current quarter, in terms of EPS, the average estimate is 4 cents. A year ago, they did 3 cents. Interesting. And the current year, they're projecting 27 cents for EPS versus 15 cents in the prior year. And revenue-wise, we can see here, $740 million for the current quarter estimate. Last year, $580 million. That's 27.5% growth. So pretty nice growth there, considering the PE is under 30 now, 28 on a trailing 12-month basis. Not bad, not bad. And the next quarter, guys, their growth's going to accelerate. We can see in the June quarter, $800 million is the estimate for revenue, roughly. Last year in the same quarter, $596 million. That's 33% growth. Very impressive. And for the current year, guys, they're projecting 22% growth. On average, it looks like here the estimate is $3.19 billion. Last year, it was $2.61. Not bad, not bad. So I think, honestly, man, this is not financial advice, but I think SoFi is getting back to the buy buy range, right? Buy territory, whatever you want to call it. I think it's getting there. And again, that's why I'm looking to sell these cash secured puts at $9, $10, maybe at a month out on the expiration there. And hey, if I'm able to buy, awesome at those levels. If not, I keep the premium, and I'm a happy camper either way because I'm up on the stock a good amount. So that's pretty much it for this video, guys. We broke down SoFi, the numbers behind it very quickly, the charts, kind of where I'm at on the stock. So what do you guys think? I'm curious. Let me know your thoughts in the comments. Run the likes up. Do not forget to subscribe. We're on the road to 100K subs. And guys, snag up your free stocks for Moomoo. Use the link down below. Deposit at least $100. You get 5 stocks. Deposit at least $2,000. You get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY. Guys, I'm telling you, it's a no-brainer. Get on it. Use that link right down below, or go to stocksurfest.com/Moomoo. And with that being said, cheers. I'll catch you in the next video.